Hello, everybody. So in today's video, I want to cover Sea Limited. Sea Limited is a stock that was popularized, about 18 months ago, late 2020, early 2021. Everybody got interested in Sea Limited, at least in the growth stock space, because this company is very unique. It's at the intersection of three megatrends, and I would even put growth in Southeast Asia, population growth, as like one of maybe a fourth megatrend, like a demographic trend. This company is at the center of change, and I think it's got a lot going for it, but it ran into an issue which we'll get into, which explain why the stock is still down 80% from the highs, and which explains some of the trouble that it's been having. But I own Sea Limited. I think Sea Limited in general is a good company, and I love that it crosses across multiple megatrends. So what does Sea Limited do? Sea Limited is an e-commerce company first. That's the first thing that they do is e-commerce. They actually grew 39%, their e-commerce business, and their brand is Shopee. And Shopee is the leading e-commerce platform for Indonesia. And as a reminder, Indonesia has more than 200 million people. So it's a huge market, about the same size as Brazil. So I think MercadoLibre is a good comparison for Shopee. But they are also going in other markets like Malaysia, like Taiwan, Thailand, and Brazil, actually, but the Brazil division is not doing as well. And if you look at the online marketplace that is most popular in Southeast Asia, that is Shopee. Shopee is the most popular platform out there, which is it's fascinating. It's not a subsidiary of Alibaba. That's most popular. It is Shopee, right? We're not talking about China here. We're talking about Southeast Asia, a big market that is often forgotten in the investment universe that I look at least. What's the second major division of Sea Limited? Well, it's another mega trend. It's gaming. Gaming is a major megatrend, but if you look at their gaming revenue, you can see that they've suffered tremendously ever since the third quarter of 2021. And why have they suffered? Because they've seen a tremendous number of uninstall of people getting rid of the app in a big country, which is actually in South Asia, but that was India. And they were scheduled to post more than $1 billion in losses. They lost a lot of money because India banned their game. And their game was not just any game. The game that Garena developed in their gaming division that belongs to Sea Limited was a game called Free Fire, which was one of the most popular games in Asia, with 150 million daily users. And India did a sweeping ban on 50 different apps, and they banned Free Fire, which is very, very interesting actually, because these bans were going after Chinese companies, but they got in trouble with the Singaporean government, who was actually upset at India because they didn't understand why India banned Free Fire, which was not a China company but actually a Singaporean company. And so the game is banned. They're trying to release a new game, but it doesn't seem to catch on. So I really don't know what the state of the gaming division is, but much of the reason for the tremendous drop in stock price on that stock can be associated to the ban of the game that they've developed in China. So it's in India, sorry, not China, in India. So it's really not a long-term thing. I mean, if you look at this, it's really a short-term thing, and it doesn't change the megatrend. The megatrend of gaming, I believe, is a very, very real megatrend. I do not play video games. I can't even remember ever playing one. But I know it's a huge market. And if you look at some of these titles that they have, actually, Free Fire Max, that's what they're developing, Call of Duty, right? Very famous. I think Arena of Valor is also famous as a game. These games are extremely popular. And my thesis on gaming, even though I don't play games, my thesis on it is very clear. I do believe that the gaming world is going for sports, and that's been one of my big theses in the megatrend, is that esports are going to replace regular sports. That sounds crazy when I say that, but whoever was predicting the airplane in 1903 sounded crazy too. That sounds crazy when you say that, but if you look at platforms like Twitch in gaming, and if you look at the gaming sector in general, you see that a lot of Gen Z, especially in Asia actually, they would much rather watch a competition of video game players play video games than they would say want to watch, I don't know, a football game. So I believe esports, if they take share from regular sports, like if it just take 20-30% share from regular sports, I believe Sea Limited will thrive. By the way, they are also a distributor of major games. They distribute of major American games, major Chinese game, and they have their Garena platform, which is an app for desktop and for mobile, on which you install games. So it's kind of the Steam. So you have Steam in the US. It's kind of the same as Steam, but for Southeast Asia. So even though that division is clearly in turmoil right now, and their revenues have been halved, mostly because of the ban and the Free Fire ban, mostly because of that. I believe that over the long run, this will not only normalize, but this is likely to go back up. Gaming is not going away anytime soon. It's not going anywhere. It's a megatrend. It's a megatrend that I think is coming after sports. Moving on from gaming, what is the third megatrend that I believe Sea Limited is in? Well, they have their Seamoney product, which includes, in most of Southeast Asia, a product called ShopeePay. ShopeePay is very, very, very similar to the Cash App in the US, and they actually have 52 million users. Now, keep in mind the penetration of mobile devices and the penetration of the internet is much lower in Southeast Asia. And Southeast Asia is actually a country that relies tremendously on cash. When I did some research on this, they have less than 15% of people who use plastic, i.e. debit or credit cards. Less than 15% of people use that. So as far as digital payments happen, this is a market that's probably going to move to digital payments and to apps on your phone to pay, and they're just entirely going to skip the open loop credit card and debit card payment system. And Shopee is very, very well positioned in their Seamoney through ShopeePay is very well positioned. They're also developing Seabank in Indonesia. Indonesia is their bigger market, and Seabank is kind of like a Cash App again, kind of like a SoFi. Banks are getting replaced by apps. Sea Limited is at the center of this replacement in Southeast Asia. So if you sum it up, they have e-commerce, the oldest megatrend of the past 30 years, the oldest megatrend in the digital revolution. Then they have gaming, which is perhaps almost as old as the digital revolution, especially mobile gaming, which is 10, 15 years old, started becoming big. Another megatrend. And then they have digital financial services and digital payments, a third megatrend. That's why I titled the video One Stock, 3 Megatrends. You get to invest in 3 megatrends with Shopee. Shopee is the name of their platform, with Sea Limited. And I think Sea Limited is very interesting because of that, because you get the upside from 3 megatrends. So let's go through my numbers, and this is my usual spreadsheet that I do when I analyze stock. So the first one is let's look at revenue growth. Revenue growth is only 17% year over year, quarter over quarter, from last quarter to today. Now, it's very low. But why is that? Well, the Indian ban. That's the reason why. Their gaming revenue. If I go back to the gaming chart, their gaming revenue got halved their gaming revenue got halved by their app getting banned. So of course you're not going to show great revenue growth this year. But the question is this going to stabilize, and are they going to launch new games that are going to make the revenue division go up again? What is very, very highly positive is that their e-commerce division grew 39%, which is well above my threshold, and their financial services division, i.e., their the Indonesian Cash App, if I may call it like that, has grown 150%. So revenue growth would be pristine, would be well above my 30% threshold if it were not for their gaming division getting halved. And this is something that when I bought the stock, I could not have predicted. I think it's a risk that we need to keep in mind in emerging markets, where you can have your number one product banned, and if you have your number one product banned, there's not much you can do. That is a risk, right? That's why it's very dangerous to go all in on any stock, because the government may decide to ban your product, and then what do you do? Well, in the case of Sea Limited, the stock dropped down to almost 90%, and it's a little back up from the lows now, but still. So let's talk about revenue headwinds. So is there competition? Well, Shopee is the leader. So they have, of course, second and third party player. Lazada is a big one in Southeast Asia, but they are the leader over there. So they have some competition. They're the best. Garena, however, has competition. It's got competition from people selling games directly on Android, on the Play Store, without going through a platform. It goes from competition from anybody, selling games for someone to install on a PC outside of a Garena platform. And it also has Tencent. Tencent is a major player in Asian gaming. As far as wallets, per what I've seen, if you look at the whole region, they are a leader, but then if you look at some specific countries, a lot of specific countries have a specific app that is popular. So I think overall they have a great competing position in the digital payment space, even though they have more competition than, say, for Shopee. But the reason why they're doing so well is, of course, that if you want to buy something online on Shopee, it's going to be very easy for you to get that app and pay with the ShopeePay app, because you likely don't have a credit or debit card in Southeast Asia, because they have less than 15% of people who have debit or credit cards. So these two businesses really go hand in hand. Okay, what about concentration, right? That could be a risk. Southeast Asia, they're concentrated in Southeast Asia. Brazil, their Brazil unit is not doing too well. But they have very nice industry diversification since they ride the three megatrends. Customer retention, right, has been lower for gaming. They've been losing a lot, but they've been better for e-commerce and wallets. So I would argue, even though they don't have recurring revenue, once Shopee becomes, the habit of the shopper, of an Indonesian shopper, then they'll just go back to Shopee. Macro sensitivity, of course, they have macro sensitivity in the sense that it's a retail, they sell stuff. So when you sell stuff, it's all about the rate of the economy, the rate of spend in the economy, the velocity of the money. How good is doing the economy? The better the economy is doing, the more people are going to spend. So to me, that is a medium sensitivity to macro. They are not macro resistant, right? We are not selling a recession-proof product. I've already talked about the megatrends, but I'll say it again. E-commerce versus physical retail. Where do we think the world is headed? To me, it's very clear the world is headed for e-commerce. Esports versus physical sports. Controversial statement to make, but nonetheless becoming truer and truer year after year. If you look at even Ivy League schools in the US, even schools but teams of esports. If you look at the metrics of Twitch, of people streaming of Twitch, if you look at the trends of the Super Bowl in the US, how since 2014 fewer and fewer people have watched the Super Bowl. I believe this mega trend, even though it's more longer term, I believe it's going to be real. And then digital wallets versus banks. Of course, that's the thesis of much of my investing. There is no reason to have a network of legacy bank still running COBOL in an era where you can have an app with cheap compute doing instant transactions. So I believe these are the three megatrends. Let's talk about revenue growth. Is it healthy? I believe it is. I could not find any major acquisitions, so revenue growth is healthy in my view. Then let's talk about operating expenses. If you look at their operating expenses, let me zoom. right? They have gone up a little bit in the form of general and administrative expenses. Marketing has gone down, which is good because they don't have recurring revenue. So when you have a business that doesn't have recurring revenue, you really can't argue that marketing is an investment, right? You can argue marketing is an investment when you have a SaaS software. When you sign up, someone will be there for 10 years consistently buying again. It's a more tenuous argument to make. So I'm glad to see those metrics down. And then R&D, I'm glad to see this go up. I think R&D is very important for a business like Sea. They are pushing and developing their digital wallet very, very fast, and they need to create a game. They need to create a new game. Gaming, I know enough to know that it works a little bit like movies. If a game is old, people are not going to buy your game. So they need to develop a new game, just like a movie studio would have to develop a new movie to keep people coming back. People get tired of playing the same game. So I like to see that they're investing in R&D. I think R&D is much better spent than sales and marketing for a company like Shopee. Let me move on. Any near-term bankruptcy risk? Well, you could have legitimately been scared in Q4 of 2021 and Q1 of 2022. You could have been scared. I mean, the revenue got cut so fast, so it would have been legitimate to be scared. But today, no. Today, when I look at the balance sheet, they've stopped the bleeding. They have $7 billion of cash. As soon as they had their major change in the business, we saw cash flow head down drastically, really, really fast. And then they've worked on reducing it to the point that today they have minus 1.7 million in free cash flow. So we'll have to see what it is in Q4, right? We'll have to check and make sure that this doesn't go back down to a few hundred million of negative cash flow. Very important. But I do believe it's trending in the right direction in the sense that they were able to post almost flat free cash flow. Even if they were to say have $200 or $300 million of negative free cash flow per quarter going forward, that still leaves them quite a few years because they have $7.3 million of cash in the balance sheet, and the debt, even though that debt of $5.3 billion has to be rolled over at some point, it is not due soon. The debt is staggered, so I believe this company is in good shape as far as good shape can go for a growth stock. I think it's good, but they have a decent net cash position. All right. Dilution was actually, and this is rare for me to say, but if you go back in the earlier years, it was a little bad. It was a little bit worse, but I think dilution has abated. And over the past 3 quarters, you've just had your standard dilution for that stock. 5 to 10% a year, which to me is fine. It's a way to motivate employees, align employees. I really don't mind dilution too much, although I realize I'm perhaps one of the few who doesn't mind stock-based compensation. I know a lot of people hate stock-based compensation, but there's a reason for stock-based compensation, right? As an employee, if you're the best engineer, if you're the best game designer out there, you're much more likely to go work for the company that is going to give you some stock. It's just a fact. If you're the best in your field, and you work for a tech company and you're the best in your field, you're going to want some stock. That's how these companies hire. Anyways, insider ownership is very high, 15%. I love this. Company is still founder-led. I love this. What I did not like as much is revenue per employee. It's pretty low with 181,000. Now, I'd be curious to see the makeup, because it's a Singaporean company, so Singapore salaries are very, very high, which is like when I see this number, I'm like, it's not good. My guess is that the reason for this number, revenue per employee, being very low, I think, is they must have a lot of employees outside of Singapore, where wages are much lower. So I wouldn't pay too much attention for that, even though I like to see much higher revenue per employee numbers. To me, it's a great measure of productivity and efficiency for a firm. All right, I will conclude by comparing Sea Limited to the other stocks that I follow. And in the e-commerce megatrend, I put it in the e-commerce megatrend, although I could have compared Sea to other businesses, but e-commerce is still their biggest business. So perhaps the best comparison is MercadoLibre for Sea Limited. Perhaps because MercadoLibre is in Brazil, right? They have a major major market, and they're about the same size as the C's market. The valuation is pretty much in line if you look at a forward gross profit basis on all three of them. Coupang as well. They have valuation that's very in line. Now, the reason why C is not showing well on enterprise value over gross profit over revenue growth, which is kind of my question, is how much are you paying for each percentage of growth? Well, I think you're paying expensive for a percentage of growth of C because I've put them at 17%. And so there's many analysts out there who think C is going to do 40% revenue growth. So if C does 40% revenue growth over the next 4 quarters, then C looks like an absolute bargain right now. But if the revenue growth that they have is still in the 15 to 20% because their gaming revenue keeps going down, although it doesn't have much more down to go, then that would become a slower investment, at least for the next few years. I do believe growth is going to recover. I think their slump in sales is really temporary because of that gaming unit. I really wish they didn't have that problem, but they are riding enough megatrends that this number should trend up. And as this number trends up, in my valuation metrics, C becomes even more attractive. But frankly, when you look at MercadoLibre, C Limited or Coupang, it's a tough choice. Frankly, it's a tough choice. They've all been entirely destroyed by the market. One thing that I'll say about C that I don't like as much is the gross margin, right? The gross margin is not the best at 39% gross margin. But again, we have to ask the question that gross margin includes gaming. So how much of that hit to gross margin was due to gaming? Again, this company is a little bit in turmoil right now. But I'll conclude with a lot of positivity. So as you can see, the stock is down 81%. When you looked at September of 2020, it was down even more, close to 90%. From its peak, and it's been a roller coaster. It's been a tough stock to own, especially if it's one of the first stocks you own when you start investing. But I want to look at this. I think this is a very important thing, to zoom out. When you're in doubt about an investment, zoom out. And despite the insane roller coaster that C Limited has had with a peak here and then the ban in the stock, the ban in the game of the stock, and then the stock going down, you would have still turned an investment of $10,000 in 2018. You would have still turned it into almost $50,000. So you would have had roughly 37% average annual return. 37% average annual return if you had bought it in 2018 and you held it until today. And of course, you would have had even more stunning returns if you had look when we were up here. But I do believe that this pattern is all too familiar of the 2022 period. It's all too familiar. The trajectory of this company is much more likely somewhere in the middle. It's much more likely like this. I believe this stock is oversold. There's been an overreaction. The trajectory is much more linear than this. Anyways, that's just the way it is. But let's keep in mind this business has an outstanding return despite that trip to the moon and back, so to speak, right? So I own C Limited. The company I believe is gonna get back into free cash flow positive territory. I own C Limited. I bought it at a much higher price, actually. I wish I had bought it in the beginning. No, I bought it at a much higher price. I could not predict the India ban, but I think the stock will recover. I'm actually accumulating on dips. This is the type of stock that if they missed earning by like a penny, the stock would be down 20%, and that's when you go in, and that's when I believe it's a good time to buy. No investment advice, of course, but that's what I do. And I love that the stock overlaps 3 megatrends, and then this is the last one that I'll show, which is population growth in Southeast Asia. If you compare Southeast Asia, say, to Brazil, you notice that Southeast Asia is growing in population much faster than Brazil. I believe this is a quickly growing emerging market. When you're getting more than 1% population growth a year, over 10 years, right? When you compound that, depending year up, some years up, some year down, you easily get to a 15% growth in population in 10 years. And that's very, very fast, actually. 1% growth may not seem like much, but it's very, very fast because it compounds. And so by the time it's time for me to sell this stock and retire, and I think many of us will, Southeast Asia will have a population of 1 billion by the time it's time for me to sell this stock, right? Probably. So this is a region that I want to be in. It grows fast, and I like growth, obviously. So I'm done with this video. Thank you so much for watching. This was not investment advice. This is just entertainment. Please like, please subscribe, please follow me on Twitter if you can. I appreciate all of the comments. Thank you very much and have a wonderful day. Thanks.